Welcome back. This is part two of the settings for Volatility Master. And I realized that I had an older version of settings up before, but I'm going to keep that video because what I said in that was all 100% correct still. The only thing we would have missed is this particular setting just here, the goal stop percent. That wasn't in what we were looking at in that first video, but everything else was still the same. And what this particular setting does is if the software, and you can see now I've got my goal set at 7% instead of 4.25, that's simply because this newer version is capable of making more profit. But the goal stop percent, what it's going to do is, let's say the software made 6.9% profit, but at that stage it had closed all the trades, but just not quite hit 7%, then the software is still going to want to, take out another trade and try and make a little bit more profit. But the problem with that is that it would only be looking to make 0.1% profit. But as soon as it opens the trade, it's potentially going to lose, the risk is 1%. So it could lose 1%, but it's only aiming to make 0.1. So that's a very, very bad risk to reward ratio. So in my opinion, it's not worth taking out another trade if you're only going to allow it to make a tiny amount. So that's what this one's set at. You might even want to set this at say 1%, because then if the software had made 6%, or let's say 6.1%, then so it's only got to make another 0.9. It's not going to trade because it's got less than this 1% left to try and make before it would stop anyway. And the idea behind putting 1.0 in here is that if it opens up a trade, it's going to risk 1% because that's the risk percentage you have set. So you want to be trying to make at least this much. Anyway, so that's the one setting that we sort of missed in that first video. Other than that, we got down faster profit locks, and we talked about these. This is the stop loss calculation time frame for the initial trade and for the stack trades. So you can set any time frame you like. Sometimes I'll set the stack trades at just a 1 minute time frame, but usually, well, the templates that I currently have and the settings that I predominantly use at the moment myself, they're both on 5. Right, so the software can take out two different types of trades. It can take out trades, so either buys or sells, or it can take out limit orders. And so this is where you can set which you would like it to do. So for the initial trade, use limit orders for initial trade. I have it set to false. That means as soon as it finds a position, it's going to take out a trade at market value. And the same for the stack trades. If I set these to true, then instead of taking out a trade at market value, it's going to take out a limit order a little bit further away. And to explain that, I'm going to bring up, let's just have a look at this chart. Alrighty, so on this chart, we have this red line is the top of the range and this blue line being the bottom of the range. If the market, and we're also trading the 15-minute buy. So if the market was to break above that red line, it would take out a buy order and it would place a stop loss just below the bottom of the range. Alrighty. And so just let me, all right, so you can imagine the market moves up and it goes above this range, and if all the other criteria are correct, it will break above that range, and it will place a trade right there where I drew that blue line at market value. If you had, in those settings, if you had it set to do limit orders, then what it's going to do is when the market gets up to here, the same place that activated and made a trade before, instead of placing the trade there, it's going to come back on this side somewhere and place a limit order here, meaning that the market would then need to retrace all the way back to here to activate it. So the upside of that is that because it's further back, you're getting a better entry point, which means you're going to get a tighter stop loss, which means you'll get a larger trade size, and all that means you can potentially make a lot more profit. The downside to using the limit orders is that if the market doesn't retrace, you miss out on the trade altogether. So anyway, that's the explanation of what the limit orders for initial and stack trades are. We talked about the maximum stop loss in that last video, but just to go through it again, if it did a buy order here, the stop loss is going to go, in this case, 10 points below the blue line, which is the bottom of the range, unless the bottom of the range was more than 300 points away from the entry point, then it's just going to place it at 300 points. So let's see. From the theoretical entry point down to there, in this case, that would have been much more than 300. So it would have just placed the stop loss at 300. I've got this all zoomed out with different settings, but that should make sense. Simply put, the stop loss will never be more than 300 points away from the entry point. Other than that, it will always be 10 points below the closest range. Maximum range in points and minimum range in points. These are some settings that I've added, but I'm not currently using, but I do foresee a good use case for them in a future version of the software. It simply means that between the red and the blue line, if the range is greater than 20,000, it won't trade. And if the range between the blue and the red line is less than 0, then it won't trade. So by using a large number here and 0 here, it means that it's not going to affect the trading at all, because it's always going to be less than 20,000 and it's always going to be more than 0. Unless sometimes, depending on what the market's done, sometimes the range can be calculated where the red and the blue are sort of inverted. So the top of the range might not have formed here yet, so it still might be thinking the top of the range is here, and then they'll be less than 0, so it wouldn't trade, which is what you want anyway. I know that didn't make sense, but I was thinking it, so I said it. But that's what those two settings do. But essentially, at the moment, I'm not using those settings, so don't concern yourself about them too much at all. Now, minutes per trade, that just simply means that, and I usually have that set on 4, is that from the time a trade gets taken out, or even from the time a trade closes, there must be a 4-minute gap before it can take out another trade. Now that's just simply to avoid sometimes the market, particularly during a volatile event, it can just flick up and down, up and down, up and down, and then all in one candle. And so it's to avoid any multiple trading during seriously volatile events. So if it takes out a trade and it takes profit or loses, then it's going to have a 4-minute gap before it'll look for another entry point, and that's to avoid any silliness in the market, really. Max open at once, that simply means that there can be no more than 3 trades open on this pair at any one time. You can set that at however you like, but generally, if the software has stacked 3 trades, I've either hit my daily goal or I'm getting very close to it anyway. So even if I set this at 10, it would probably never open up more than 3 before it actually hit the goal. Alrighty, so I was going to say that, yeah, so that's maximum amount open on this particular pair. So there might be 3 trades open on this pair, but you might be trading another pair as well and have multiple trades open on it as well. So there's nothing to limit the overall number of trades, just how many per pair. But there's no real need to limit overall trades because this software places a take profit and, more importantly, a stop loss for every individual trade, and it won't place more than one on any chart unless the previous trade is already risk-free with that profit lock activated. So therefore, having multiple trades open hasn't increased the risk. So there's no need to have anything else there. All right, I'm going to go through these little set of settings here. And they're sort of the technical ones that I don't expect you to fully understand or even to care about too much, but I will go through them. And these all deal with range calculations and how far it needs to break away from those ranges before it actually trades. So breakout's pretty simple. It's set at 10, and that's simply if the market needs to go 10 points above that range before it registers that as a breakout, and then it can potentially be the last criteria required before it places that trade. So the breakout is 10. Shoulder, I pretty much always have that on 4 anyway. That deals with, I'll explain them to you just because the odd person may want to know, but you really don't need to understand this. This is just part of how the software calculates the range, or in particular, the peak. So obviously, we look at this is a peak here, but for the software to register that as a peak and potentially form part of the range, it needs to have 4 candles on either side of it that are lower than it. So, 1, 2, 3, 4 candles are lower than it. And on this side, obviously, 4 candles lower than it as well. So that's what that means. It needs 4 candles on each side, each shoulder, for that to register it as a peak. And the same with, a downward peak or a trough, if I call it, is it needs 1, 2, 3, 4 above, and 1, 2, 3, 4 above. So it would register that as a peak. Candles. I just realized that I am not really using this setting anymore. So by the time you get the software and watch this video, there will no longer be a candles setting in here. So I'm not going to mention this anymore because this setting is defunct. Mitigation. Okay, if you're using limit orders, then the mitigation is how far. So back to our scenario here, when it breaks above, it places the limit order below the range, below the top of the range. It's going to place it 15 points below. So that's what mitigation does. It determines how far below it's going to place that limit order. Second peak preference, and this is just dealing with the initial trade. what that does is, if you think about how it's identified, it would identify this as a peak, this as a peak, and this one as a peak. It's going to use the highest one as long as it's no more than 40 points higher. Okay, so if there's a huge big jump up, it's not going to use the one that's heaps higher. This isn't one that's important for you guys to know, but it'll when it's determining the range, it's going to pick out all the most recent peaks, and it's actually picking out the 10 most recent peaks, and then it's trying to determine which one is actually the top of the range, and it's going to do that by picking the highest one, as long as the highest one is not more than 40 points from the last one. And second peak preference SL, that's stop loss. So it's doing the same to find a range that it wants to place a stop loss below, but it's calculating the stop loss range a little bit differently. So in this case, this setting works the same as this one, except because the stop loss range calculation is a little bit different to the actual breakout range. It opens up the potential for more fine tuning. So it does the same thing, but as you can see, we've got a slightly different setting for it. It just gives a little bit more leeway, allows for a peak to be a little bit further away than the previous one, and just making sure we're getting that stop loss below the range, whereas we don't mind jumping into the trade just a little bit early if there is a breakout. We definitely want to get that stop loss in the right place, because I think it's pretty obvious to anyone that's ever traded, getting that stop loss in the right place is extremely important. All right, I'm going to finish on input magic number. You don't need to know anything about it at all, really, but this is just a number, and you can change it if you want. It's not going to affect how the software trades. It's simply a number that is going to be attached to every trade. You won't see it, but it's attached to every trade that the software takes out, and it's a way that the software can identify one of the trades that it's taken out. So, if you happen to make a manual trade or something on top other than the software, then it's going to know that that's one you've taken out, not one that the software has taken out. Alrighty, guys, we're getting through these settings now, so not too much at all to go. So the next video should probably be the last one we need to do. I'll see you in that one.